Good afternoon, everyone. Trader Tim here from EminiMind's.com, bringing you another Monday market analysis. Today is October 13th, 2014. And we have some great market action. We've got some increased volatility coming into the markets, and we're going to start with the S&P. At the beginning of the month, we were kind of lingering up here at the 1970 level, and I was talking about that would be a pivotal point because we had this congestion level, this support over here back in July, and that support level was just made up of prior highs that we made in July. And as we pulled back, one of two things could happen. We could either hold that support and rally to new highs again, or break that support level and start breaking down to the next support level, which was back here, March, April, May of 2014. And that's quite a big support level. There was a lot of sideways action, so that gives us a lot of support below us. There's a lot of buyers and sellers who are kind of looking at this point to either get back into the market, to take profits on shorts, those who were bears at highs. So there's a lot of different players coming in at this level. If we look at the daily chart here that I have up in front of us, the last couple of days have been rather large candle, large range-bound days, and the volatility has matched that. So if I flip over to the volatility index, the VIX, we finally have our spike, our small spike, that is, up into the mid-20s. If I pull out to a 5-year chart, you can see that really that's not a very big spike at all. Back in 2011, 2012, we were up in the 40s and 50s, and really the last couple of years, we've, mid-20s has been the high point. Even back here in the middle of 2012, the high was only 27. So we're creeping up relative highs, as in the last couple of weeks and couple of months. Certainly a higher point than we've seen in a long time. So this, the mid-20 range is really a great, probably one of the best times to be a trader in the mid-20s. You have a nice mix of ranges in the intraday bars. For example, if I come over to the ES chart and I go to just look at the 5-minute, and so if we go to today's price action, and if I just draw from this morning's highs to lows, right at the open, the entry, the short that occurred at 1898s, traded all the way down to 86s. So that's over a 10-point range. And, in the middle of the summer, when volatility is in the low teens, we might see 3 points, 4 points. So for independent traders, or individual traders like ourselves, that we're looking to kind of capitalize on these moves between points A and B, we're not scalping. We're not looking for a couple of ticks. We're looking for a price movement that's substantial, that we can get in and get out and see some substantial reward for the risk that we're taking. This is a great opportunity to take advantage of the volatility. So so the entry here 98s, and we only went in 1 point. We only traded up to 99s. So you essentially have a 1-point risk for a nearly 12-point reward. And so that's another reason that when the volatility is kind of in the mid-20s, it's not high enough to really shake you out and create so much volatility that you get whipsawed around, but it's higher than we've seen in the summer, and so the ranges, the points, or the profit potential from point A to point B is a lot larger. So as I kind of digress there, my main point is that we have seen now a spike in volatility, and as long as we stay above 20, I'll look for those larger intraday ranges to continue. If I go back to the S&P, I'm actually going to go to the SPY so we can take a look at the volume. Last couple of days, Thursday, Friday, and then today, Monday, we've had some nice big volume coming into the markets. Now, I'm not overly bearish in the sense that I think we'll, start tanking and go all the way back to lows of the year. And for that reason, I'm just drawing on this chart. You can see we are sitting right at halfway back of the entire year. So we've come halfway back on the year. We've got the rest of October and then November and December. And I do see some more upside potential through the end of the year. As I said earlier this month, the likelihood that we will probably move a little bit sideways down here and reconsolidate. Let me remove some of these lines. Kind of reconsolidate at this level. At this support level is very likely at this point. You don't have a series of 4 or 5 days, large days in one direction without some sort of consolidation. So the remainder of this week, I would look for us to, maybe get one more spike down, but then to kind of chop around a little bit, move sideways for volatility to kind of round out. So we had this spike this week. We had the spike the last couple of days in the opposite direction of the market. So volatility spiked up as the market spiked down. And so I'd look for the volatility to kind of move sideways as well. Then I'd look for the S&P to kind of consolidate and move sideways here. And then once we get that sideways movement, we will look to the bounce that we get and how much follow through there is with that bounce. So if I go back to a daily chart, I've got the full halfway back on the year drawn. That's the 2014 lows to highs. And you can see today we came down right to it, right at this consolidation level here back March, April, May. We did break the prior swing low that was a very significant low that I've been talking about for I talked about in the October monthly video, but I've highlighted that low as a significant low in the past. If we zoom in a little bit, we can see that, I'm going to go ahead and delete all of these. The long failed. So the halfway back long broke the 61.8, we failed, and so what we can do, or what we did, is draw from highs to lows, and that gave us the first short setup. That traded down through the negative 23, down into the all the way halfway back long, 50%. So now I'll go ahead and draw up with two things. Since we broke down through the negative 23 rather violently, we can draw from lows to lows. And so the first thing I'll look at is if we get a bounce to 1891 and immediately sell off and start breaking down through the lows once again, that will be some very significant bearish sign, because not only have we sold off hard in the last couple of weeks, but then a small rally would be immediately met by more selling. If we break the extension short here at 1891s and perhaps come all the way halfway back short, which is very likely, if we get a bounce up to 1938s, then I will look for us to consolidate, and then I will look for possible sell-off, and then a retracement down to 1900s, and look for the opposing long to trade, and at which point we kind of bounce in between the two halfway backs, and then I would look for either the short to fail or the long to fail. And so those two are the most probable scenarios, that we either bounce up to 1891s and get an immediate sell-off, at which point I would become very bearish, because that would mean that we're the bulls can't even push us 20 points or so without being met by bears that are stronger. If we get a rally up to 1938s and either push right through or consolidate, pull back, make a higher low, and then start making a nice series of highs, then I would look for this 1873, all the way halfway back of the year, to hold, and that has a target all the way above us at 2081 on the ES. And given that this low to high took about 8 months or so, I mean really the entire year, so far in 2014 to form. If we can hold the 1873, I would look for that to hit a target of 2081 in 2015. So those are the two scenarios that we have right now. A short bounce, an immediate sell-off would make me very bearish, or a little bit larger bounce to all the way halfway back short at 1938s, and some consolidation, maybe a pullback, and then a met by a long at 1900s that has consolidation, maybe some chopping around in between and moving higher. But those are the couple of the scenarios. We've got some nice support below us as well as some congestion above us. So with the increased volatility, the day trading will be very good and through the rest of the year, and as long as the volatility stays above 20, so or in that range, 20, 25, that's my favorite volatility range to be trading. So have your radar on for more bearishness, but definitely get out there and get trading, especially on the intraday. There's a lot of good setups to be had. Swing trading, it's all that 20 to 25 range is the ideal point for a trader to be involved in the markets. So I hope you have a great week. I'll be doing a webinar tomorrow on Tuesday, the 14th, at 3:30. That would be 3:30 Pacific time. And you can find the details in the member dashboard as well. If you miss it, I will try to put the recording in the dashboard, and you can catch it there. So I hope you have a great week, and we'll talk to you next week.